Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. As usual, let's talk right now on the gold market. Maybe analysis on the gold market will not be as thrilling as on the Great British Pound yesterday, but still there are some important moments that we should talk about on the gold market. Well, guys, currently the situation on the gold market looks really interesting because it has happened somehow that as fundamental background, as technical analysis coincide and supports each other, and the chances on the retracement that we have discussed within the recent couple of weeks right now becomes even greater than it was on the last week. Because what we have on the fundamental part, the gross domestic product has been released to the upside. This is positive surprise that increased chances of some more hawkish rhetoric from the Fed on the March meeting that will happen not as far ahead, so it's approximately 2 weeks ahead, and the investors definitely will be careful with them. Some fast movement on the markets. They hardly will do something really fast. So they need to see what really Fed will say and how they assess the recent stats. The second, we have the ceasefire in the Syria, and by the recent news, it seems that it holds not bad, not bad at all. So there's really was marked a real season of the fire across the board on the different fronts on the Syria. So, but this news hasn't been worked out yet by the market, since the ceasefire has started only on Saturday. This retracement that we see right now on the chart is just reaction on the gross domestic product revision. So that's why we could hope that ceasefire will bring some more relief on the market. The gold market and retracement really could continue. And currently, guys, it seems that the chance to get a nice entry point on the gold market becomes better than even on the last week. That's the major idea right now in the gold market. At the same time, it's very difficult to say something really new here because the 2 recent weeks was inside one. So when the market has completed this upward action, this was the inside week. Right now we have another inside week. So drastically, situation hasn't changed on the gold market. Here we should pay attention to these tails that has been formed on the last week, and this, guys, seems that it reminds real capitulation of the bulls in the short-term perspective. That's why here you could understand why I said when we have this part of chart, I said this is too small top to treat it as the second top of the double repo. There's too significant difference between the tops, and this doesn't look like the capitulation of the bears, of the bulls. This is just minor retracement here. But here, guys, we see definitely the attempt to push market higher and failure. This is in fact the capitulation of the bulls in the short term. Then another attempt that has become weaker, and that is starting to move down. Although we haven't got yet the close below the 3x3, but it's really very possible that we will get it on the beginning of the next week on Monday. It really could happen, and by this action we could get the double ripple sell confirmation. Here, guys, would not call you to trade it because this is nice pattern, and it's really nice working pattern. It has really not bad chances to succeed. But in the current environment, we do not interested with the trading short on the gold market. We are interested when they get good entry opportunity on the long side. But it doesn't mean that you can't trade it. It's not forbidden. So if you feel some inspiration to do this, and you would like to trade the double ripple sale pattern as soon as it will be confirmed, you could try to do this because you have the reason to do this. You have the pattern. But you should know that you take additional risk because overall sentiment is strongly bullish on the market. That's why the chances on the failure or some unexpected action here is more significant than when you trade the bearish pattern, I mean double ripple, when the overall sentiment is bearish. This is quite another story. That's why probably you could meet a bit sophisticated moment when you will have to turn from the direct double repo to the double repo failure. If it will fail, and you will have to reverse the position very fast because you can't be slow when you deal with the double repo that turns to double repo failure. Because double repo failure is also the directional pattern. This is not just the canceling of the direct pattern. That is also the pattern, and you will have to change your position. And this is not everybody could do. So you need to get some skills, to have some skills, some experience to do that. But at the same time, you can't get experience if you will not do this. That's why you should think and decide would you like to trade it or not. But by itself, it's pattern really interesting, and it would lead market right to this area. This is approximately the area that we are watching for taking a long position. Confidence support on the daily chart. 1167, 1180 area. So that is what we will be watching for on the daily chart. On the 4-hour time frame chart, situation is really also interesting, guys. Recall what we have discussed on Friday. We have Gartley's 222 sell pattern, and we said that we need to get some confirmation that it starts to work. And the first confirmation should become the canceling of this, erasing of this bullish grabber. I don't have the MACD predictor, but you probably remember that was the bullish grabber. And this really has happened. So market has erased it by this dropping and taken out of these lows, and this grabber has been erased, so it hasn't achieved this top. And although this lows is still valid, because as you can see, the butterfly pattern here is still possible theoretically. But this drop here below these lows makes the chances that it will appear almost phantom. So it's very difficult right now to suggest that in a normal situation, if we suggest that we wouldn't get any awful surprises in the geopolitics, in some really bad news, if market will stand on its own driving. So in this case, it's very difficult to count on this butterfly anymore. So it increased chances of further drop. The target of this Gartley's 222 as AB equals CD pattern should lead us right to the 1178, and this level is the upper border of this confidence support. So by this action, really we could get the completion point of this action down. So it would be nice if market will drop below this trend line and return back in this triangle consolidation. This will be just perfect. But this hasn't happened. As you can see, market just tested it, test this area, and then pull back. But again, we still could get the chances on the further downward action by the, as I said, some fundamental news. So market could get more relief on the next week. On the hourly chart, guys, it's also some interesting moments to watch for. If you remember here, we have completion of two butterflies. That was the strong support resistance area. This market has started dropping. And here we guys have two important moments. First of all, recall this minor ABCD that we have discussed on Friday as well. So market has completed 100% target. Now stands in reasonable upward retracement. And take a look. This retracement has topped at 1227, confidence resistance. Also, guys, weekly pivot point for the next week will stand also here. Another area that will be not really bad resistance stands right here. So you can see this is some kind of the round top consolidation. We have said this probably market right now is turning to forming some round top, something of that sort. And you can see that was the support of this round top, and the market bounced up and it's forming this round top and losing the upward pace. And you can see this. First, it shows increasing swings up, starting to move, showing the decreasing swings up. So this consolidation market will protect. And if market will show some kind of the ABCD retracement, most important target, ending point will stand right here, because market will protect this area from the price returning back inside of it. Why this ABC retracement could happen because market has formed reversal swing, guys. It's also interesting. Take a look, upward action. Here market has failed to show the upward swing and drop lower. So you can see the swing up is smaller than the swing down. And this also has the bearish sign. That's why here I'm not really believe much in this butterfly. And that's why I think that the chances on the appearing of the double ripple here has increased. So, and finally, final moment, it's also very interesting here. Very important level, guys, here is to 1190 area. Because you can see this is the first low and the first cross of the 3x3 moving average. I suggest that really sufficient amount of stops have been placed right below this area. And the really wonderful feature of the double repo is that when it reaches these lows, it triggers the stops that have been placed here. Those guys, traders who keeps long position, who have entered on a retracement here. They are waiting for retracement. They have waited it. Market has bounced up. They maybe not understand that this is not the upward continuation. This is the failure of the bulls in a short-term perspective, where they will place their stops definitely below these lows. When the market will confirm double repo, you probably will get the chance to take the short position if you would like to do this before market will reach this area. But when the market will reach this level, the stops will be triggered and market will accelerate lower. The daily overbought will not be able to keep the market because market strongly, daily oversold, because market strongly overbought on the weekly chart. And this is such sort of the situation when the weekly overbought overrules the daily oversell. So the weekly signal is stronger. The higher time frame is, the stronger signal it has. So that's why market easily could break below this daily oversold area by the triggering the stops that have been placed here. That's the very interesting and attractive feature of the double ripple. Now let's return back to the hourly chart. Take a look at the 100% extension, 1618 extension stands, where I even makes the market very interesting level. It stands precisely around these lows. So as soon as market will hit this target, market makers could push market slightly lower, stops will be triggered, and market easily will fly right to this area. So mostly, guys, daily traders, and including me, we mostly will be watchers on the common week, since we're interested for taking the long position. That's why it will be just interesting to watch how the situation will develop and how the market mechanics will work, how stops will be triggered. So it's really interesting from the educational point of view. But if you would like to trade and take part in this mess with this double repo pattern, well, it's also will be interesting. So you could try to do this. But as I said, from the probability point of view, we should warn you that this will be risky. So that choice stance is up to you. So that's our current view on the gold market. Maybe we'll get more action on the common week, and maybe in the next daily update will be more interesting than right now. But still, as you can see, it's really some important and interesting moments exist right now on the gold market.